Hello, good morning and welcome. You are watching The Mining Show, brought to you by Blytheweigh on Core Finance, and I'm Charlie Gibson. Now, over the years, we've had many innovative companies that we've interviewed, and perhaps one of the most innovative we are going to interview today. And you'll see why in just a moment. The company is Hansa Resources, and joining me is its VP of Corporate Development, John Costigan. John, a very good morning to you. Thank you very much indeed for joining us.
My pleasure.
Tell us all about Hansa Resources.
Hansa Resources is a TSX-listed company. We're entering the marine mining space by virtue of an exploration license off the coast of Ghana. The coast of Ghana contains, it's very unique in that there's 3 river systems that feed the Ghana coast, and over the last 2,000 years has deposited enormous amounts of gold upon that coast. No one has really ever looked for that gold with the techniques and the technology that we have today.
Okay, so tell us about those techniques and technologies, why they work now and why they didn't work before.
Well, in the old days, you would take out a dredge and you would poke around at the mouths of the rivers and hope that you'd get something. Now what we can do is we have multi-beam sonar, side-scan sonar, acoustic imaging, and by those means we can look for the heavies in the sand that has been deposited over the centuries and isolate where the gold is. The gold will associate with the magnetite, and the sand itself is valuable. There's zircon sand and there's ilmenite, which is a TiO2, which is extremely valuable. The gold, of course, is what we're looking for.
So what you're trying to do, correct me if I'm wrong, is you've got the rights, have you? What's the situation?
We have applied for a 2,000 square kilometer exploration license. So it's a big chunk of ocean.
Okay, is that sort of 2 kilometers by 1,000 kilometers, or is it?
No, it's the entire coastline.
You're
so
right,
it's the entire continental shelf of Ghana. So it's a massive area. So it's taken some time for the government of Ghana to digest it. We had our last meeting Monday. This is why we're here. We're about to launch this. Everybody was favorable. We had a great reaction to the technology that we're going to bring to Ghana. Now, Ghana is well invested in the project. They're going to own 10% of it. They get a 5% royalty. They get plus all the new information, all the sonographic information, all the magnetometer readings that we get. Once we drop those concessions, the Ghana government will get all that information.
So you, assuming you get this license,
yes, sir.
You then steam an exploration vessel up and down the length, you're looking for heavies, which fairly easy to spot because they'll have a big magnetic signature.
Correct.
They'll probably also have a big gravimetric signature as well.
Absolutely. We're also looking at the topographic information so that we can track where the ancient, the channels of those rivers are. This is basically an alluvial gold operation offshore where nobody's looked.
And then to develop it into production, you then need another ship, which then goes and sucks the sand off the seabed, or
The exploration ship is also a pilot ship. So we can, once we're doing grab samples and core samples off the same thing we're doing the sonographic, we can also process the gold on that same ship. We're talking about a ship that costs in the neighborhood of $300,000 to $400,000. So it's a large 20-meter boat, and it can suck up, and we can start to produce gold. But we will be using that. That's our pilot project in order to prove what the concentration of gold is in those sands. And what we're looking at the end of the day, in 5 years' time, we want to be producing over 30 million cubic meters, processing over 30 million cubic meters per dredge.
So that then requires a much bigger ship.
That's a much bigger ship.
Okay,
absolutely.
but for now, it's the pilot-sized ship. And all right, let me make an analogy. Is this like Namdeb does off the coast of Namibia, like De Beers does off the coast of Namibia?
It's exactly like Namdeb. It's very similar to what they're doing in Sierra Leone, which is it's a huge ilmenite project. What nobody has is what we have. We have gold. Looks like we're going to have alluvial diamonds as well, a little further south. But we're going to focus on the mouths of the top 3 rivers there for gold, and we will characterize the aggregate as well for the Ghana community for construction, because Ghana is growing between 8 and 9%. They're targeted to possibly be the fastest growing economy this year. So they need enormous amounts of construction material, and they do not have it available. They import their aggregate. And the ilmenite, of course, is about $1,000 a ton. So we want to characterize all those initially, but we will be able to withdraw the gold and get a sense of exactly what that concentration is. And if I give you a sense of the kind of revenues, at the end of the day, if we're processing 30 million tons, cubic meters, should I say. The guys in the marine mining use cubic meters. At 0.1 grams per ton, which is not economical on land at all.
0.1 grams per cubic meter, is that?
Per cubic, I'm with you too. That's 3 million grams. That's $126 million right there.
Right. So
Now, that is a very, very minute portion of a cubic meter.
Yeah.
Now, the expectation in the old day, they got between 0.05 and 0.5 grams per ton with no locating technology. We believe we can do much better.
So the part of the reason this works, because of course those sort of grades don't work on land, do they? But it works here because it's just sand you're sucking up. So the costs of processing the rock are reduced by orders of magnitude.
Very, very much so. I mean, the boats, the equipment, are expensive, but the volume. Also, it's a volume thing. At the end of the day, if you're processing that kind of volume, you really need minuscule amounts of gold.
So when we think of normal mining operations, and from that revenue figure, that's about 100,000 ounces a year.
Correct.
Do you have an idea of what the costs per ounce could be?
We do cost per cubic meter.
Right, okay.
So,
but you know you get 0.1 of a gram per cubic meter, so you know roughly you can get from one to the other.
That will be. I haven't done that
Right,
one off the top of my head. We've calculated everything in terms of cost per cubic meter, and we've basically looked at the aggregate business. In the aggregate business, we sell between $6 and $8 cubic meter.
Yeah.
And we can mine it for $2.
So 0.1 of a gram of gold, I think, is worth about $4, something like that.
$4.20.
So there we go. All right. Okay. So rounding a little bit. Okay. Yeah. And so you must be then processing that sand at less than $4.20.
Absolutely.
Per cubic meter.
The aggregate business will pay for the gold processing.
Fantastic. Now, when we think normally again of a mining company, we talk about resources. Mm-hmm. Can you calculate a resource in the normal NI 43-101?
We can. We can.
Have you got one?
We have an NI 43-101 technical report that needs to be, once the license is issued, we will issue the 43-101. It's not a resource, and we will have difficulty doing a gold resource, as any alluvial company will.
Yes.
But we will not have an issue doing a industrial sands mineral resource,
right,
which will allow us to attach a strong and concrete value to the project, whereby we can get financing to run an industrial mineral sands project, but whose target is still gold.
Okay, so it's a gold company, and then you get industrial mineral sands, you get aggregates, you get titanium dioxide, right, and those are all, and a few diamonds every now and again.
Sure.
If sucked up the pipe.
Yep.
And those are all byproducts then?
Absolutely. And those byproducts are what we can calculate the resource on.
Okay. Now, your CapEx then is the cost of a ship, I assume?
Yep.
What is the cost of a ship?
The cost of our pilot ship is roughly, fully equipped, $500,000. The cost down the road of what we're looking at is $100 million.
Okay. But that's roughly, if you're developing a land mine, I don't normally have to say these things, right? A mine that's on the land,
yes,
and it's a 100,000 ounce a year operation, it's probably going to cost you 100 million.
Absolutely.
So in that sense, it's comparable.
It's comparable, but those are very, very low values. That's the low end of the spectrum. So as we said before, those kind of values would not work on land.
Yes, and can you buy these things secondhand from NAMDEB, from De Beers in Namibia? Or
we have partnered with a company called Royal IHC out of Amsterdam. We do have an agreement with them to become they build these boats. They custom fit, they purpose build these things. So yes, it would be a used, custom built type of dredge that we would operate. And what we're looking at is more than one boat. I mean, we want to be the largest marine offshore gold mining company in the world. And I think we can do that in 5 years, because what we're looking at is these IHC type dredges.
Is that Boscalis IHC?
No, because
they have quite a lot of expertise in this, don't they?
Right, they do a specific kind of dredging where they keep the surface intact, and they can actually suck out the aggregate from underneath the surface and allow the surface to just descend, and thereby not disturbing any of the marine, the ecosystem.
So there isn't an environmental issue here?
Oh, no.
You're sucking out from underneath and letting it all settle down. You're leaving the crabs and lobsters on the surface.
You can do that.
So to speak.
You can do that. I mean, we do have to do an EIS, so we will do a complete EIS. We're going to be transparent. We know what we're doing. IHC is a leader in sustainability in terms of marine mining, so they've got that covered.
So you're raising money at the moment.
Yes, sir.
Just tell us a little bit about how much you're looking to raise.
We're looking to raise $2 million for the initial exploration costs. That's got a 5-cent share. It's a unit, so a 5-cent share, 10-cent warrant. So in total, there's $6 million there, which we believe will cover the first 2 years without any revenue being generated.
So the first 2 years then covered, and then assuming that that there is proof of concept,
Yep.
that's when you look to scale the whole thing up.
We'll scale the whole thing up. It looks year 2, we'll have a lot of information. We'll know what the concentrations of each and every element is down there. We'll have had some revenue, and at that point, then we're looking at purchasing larger ships. So we're looking at the first raise might be $6 million, year 2, $50 million, year 5, $200 million. That's how we think we'll grow.
Investors think of marine mining. One of the companies they think of is Nautilus.
Absolutely.
But you're not really like that.
Deep sea mining is international waters, so they face jurisdictional issues, legal issues, technical issues in terms of the deep sea mining and the pressures and the specialized equipment. We are marine mining. It's been done for hundreds of years. It's simple. It's just that the technology now that we're using to locate the minerals that we're looking for is much more advanced.
All right, John, thank you very much. I'm afraid that's all we got time for, but thank you very much indeed. We wish you the very best of luck.
Thank you.
Ladies and gentlemen, that was John Costigan, the Vice President of Corporate Development for Hansa Resources. I'm afraid that's all we got time for today for me, Charlie Gibson, on the Mining Show brought to you by Blytheweigh. We'll be back with more ideas, more innovations next week, and until then, you have a very capital day.